Welcome to Subramani. I'm going to talk a little about the state of the economy or what the market looks like. My view, completely my view, and I have complete right to be wrong. Market valuations look little attractive, but they also look expensive in certain sectors. So not all sectors are attractive, but I will also not recommend buying a share just because it has fallen dramatically. Because if you take something like an Info Edge, it went to 7,000. I don't know whether 7,000 was the right price, and I don't know therefore whether 4,000 is the right price. Same thing for Paytm or Zomato or any of those shares. I'm not talking about those shares, but yes, the steel shares have corrected. I'm not even suggesting a buy in steel. In fact, I think the steel user industry like automobile may be better off. But even in an automobile today, the steel component is not so high as to be worried. In fact, the construction industry will benefit if steel prices go down. Housing will benefit if steel prices go down more. Cement prices are still high because raw material costs are high. Valuations have come down. Valuations have come down definitely in case of paints and cement and all those industries where the cost of raw material had gone up. So their margins had to go down. So therefore the valuations are down. So what looks good? Every mutual fund is willing to tell you that BFSI looks fairly priced. But remember, BFSI includes the manufacturers like insurance and AMCs, right? Asset management companies and insurance companies are part of BFSI. There is no reason why they will not buy their own shares. It could be self-prophesizing, right? So they could say, I think BFSI is underpriced, so they go and buy BFSI. So they could be buying that itself could cause the BFSI to go up. But yes, banks don't look too badly priced. They have taken a hit and they were like this, they're here and now they're steady, right? They've been steady for some time, and I don't see ICICI Bank going much below 750. I don't see HDFC Bank going much below 1300, but I don't want to comment on HDFC Bank because there is HDFC Limited, HDFC Bank merger. So an oversupply or excessive demand for the bank and excessive supply of HDFC Limited, all that could be impacting the price. So when HDFC Bank goes up, the Limited also has to go up, and Limited has to go up a little further because so all those forces are at play. But yes, I can see Sundaram Finance not having gone up much. I see Cholamandalam as a good buy. So many of the shares in the BFSI space look reasonably priced now and could be doing better. Cement looks fully priced in the sense that of raw material cost, but the way to look at raw material cost is I expect crude US shale oil to come, and US will become an exporter of oil, and therefore some oil prices could get softened, and one fine morning the Ukraine war could stop. If that happens, then oil could be at a more reasonable $80-90, which will bring back the life into the cement companies, paint companies, etc., who are all reeling under high material costs. So cement looks okay, banking looks okay, healthcare looks good, because and healthcare I have a problem that I do not know which share to buy. So I have Sun Pharma, I have Ipca, I have some of those shares, but I would prefer a fund because it's very complicated. You do not know which company is having a lot of export, which company is catering to the domestic market, and pharma is not cyclical in the sense that there will always be demand. So I would prefer a healthcare fund more than I would prefer a single share. I wouldn't know which share to buy. Of course, I have Sun Pharma. There is no doubt about that. I have Ipca Laboratories. I have Cipla. I am some of those shares. I have Glaxo. I have Pfizer. I mean, it's there in my portfolio. So it's not over and above that. I would prefer a pharma fund or a healthcare fund. So having said this, I am not too bullish on metals. I've sold some metals, but I'm still holding. I'm mostly out of sugar. Sugar is not something which I like, but fertilizer I'm not very clear as to what to do. So Coromandel fertilizer or Coromandel International still hangs around in my portfolio, and maybe above 1000 I'll get rid of some of it, but right now I still have it, right? So our interest rates likely to go up. Interest rates are likely to go up, but maybe we are over discounting it already. Maybe we think it will go up so much, and it may actually not go up so much. It may go up only so much. So if interest rates at 7.7, 7.8 for the 10-year GSEC seems to be to me quite high. It could go to 8. I'm not saying it won't go to 8. I'm not saying it won't go to 8.25. But I think a lot of the hike is already priced in, and therefore I would move money from liquid and ultra short at least to short term, and after some time maybe to gilt also. I don't mind going for a 10-year duration, hoping that interest rates start coming down. Already HDFC Limited has increased the home finance rates. People who have already been at 6.5 or 6.25, 6.5 are already feeling the change. It's already gone to 7.05. It perhaps touching 7.50 in another month's time. So with that interest rates going up, maybe it is time to look at auto. With steel prices coming down and interest rates hardening a bit, maybe it's time to look at auto rather than some other sectors. So auto looks good. Cement looks okay, BFSI looks good. So these are all shares, these are all industries or sectors to which you can move, because I don't think the market goes up or market goes down. Some sectors go up, some sectors go down. So if oil prices soften, then maybe the economy will do better. Global economy may or may not do too well, but the domestic economy will do well. We do not know whether COVID is going to spread further. We keep speculating. We see, 20,000 people have been hit, 3,000 people have been hit. We don't know how to deal with those numbers. But we need to prepare for a world beyond COVID. A world beyond COVID is something which you can already see in the airports. There is no place to stand. It is chock-a-block. Are they making too much money? No. But have airfares gone up? Answer is yes. So people are buying more expensive tickets and traveling. I'm convinced that if the oil prices come down, the airline rates, airfares will not come down, because it's now a very clear duopoly. There are the Tatas and there is Indigo. As of now, the other airlines don't matter. So if you see the pricing, even for say an October ticket, we are now in June, the price is not very low, right? Yes, oil prices could fall, but I don't think, if people have got used to paying say 4,500 rupees for a Bombay Nagpur ticket, and the airlines find that the planes are full, there is no reason why they will reduce it, because like I said, it's a duopoly. There are 3 airlines controlled by one, and there is Indigo, and between them they have 80% market share or 85% market share. So I don't think SpiceJet pricing or anything will really matter. People will prefer going by an airline which will definitely take off. So if you are preparing yourself for a post-COVID world, you should be looking at Thomas Cook, you should be looking at Indigo, you should be looking at Mahindra Holiday Resorts, because people will start traveling. I mean, whenever we do any event, whether it's a social event or whether it's an official event, we find that people are coming in hordes, because people are sick of sitting at home. So prepare yourself for a slightly pre-COVID world. I don't worry too much about interest rates, because interest rates will go up, but then the lack of growth might bring it down. There will be a rise, but the rise will be far more tepid than what the market is planning for, or market thinks it will happen. So Nifty is now not too high, but I would still be far more specific rather than saying the index will do well. Maybe index will do well. A lot of the stocks have corrected. Maybe 50% of the NSE stocks have already corrected, therefore creating a lower valuation, which makes it more attractive for people to buy. There has been a lot of FII pull out, and FII money might just be coming back. If the FII money comes back and if the FDI has not gone down much, then the rupee will get stronger. If the rupee gets stronger, will more money come in? Perhaps more money will come in, more institutional money from abroad might come in. But will there be tightening of the money supply? I think so, yes. Interest rates in US will definitely go up. They are worried about inflation, but then country is obsessed with growth. So minute they think there is a threat to the growth, the interest hikes might stop. I doubt whether there is going to be 50 basis point hike every time there is a hike in the US. No, maybe after 2 hikes it will stop. So that we are guessing. Decoupling may or may not be happening, but definitely the domestic market is doing better than the US foreign market. So domestic oriented companies, so an Ashok Leyland might, or a Mahindra and Mahindra might be a better bet than Tata Motors, but the call is yours. I have Tata Motors in my portfolio, but I have to very quick to admit that I don't understand today's Tata Motors. I bought Tata Motors at a time when I understood Tata Motors, and I've been holding on for a long time. So what is likely to happen with the dollar? Well, the dollar will strengthen. Will it strengthen a lot? I don't know. A lot of Indians have been investing abroad, so they are actually benefiting. Will the RBI allow the mutual funds to start investing abroad? The answer is yes. We do not know when. Well, largely my take on the state of the economy today in the month of June 2022. Thank you.